Hi, it's Steve and Joe from Freshagenda. And Steve, this week we're having a quick tour through some trade insights that we've pulled together for subscribers this week, and also a bit of another look back at some of those indicators that show how COVID-19 is affecting markets.
Yeah, there's some pretty cool things in this set. So trade insights, we've added up April trade, and while this is a little while ago, it is probably at the depth of the impacts of lockdowns and some of the logistical problems. So trade was fairly resilient. Yeah, we were down less than 1% in overall milk solids terms. You can see the highlights there. So it's recovering after a pretty big dip in March, but year on year we're against some pretty steep comparatives.
Yeah, it's pretty remarkable really, given what's happening in the world, and we've seen some stats on container trade that's down 15 to 18% for that second quarter. So, you know, pretty amazing really for dairy.
Yeah. So digging in a bit deeper, a lot of changes at a product level.
Lots of numbers on that chart, Steve.
Yeah, that's quite busy, isn't it? But powder's fairly flat in that comparison. Butterfat up slightly in net terms. Cheese got slugged this time. Again, year on year, but interesting changes across the board. And when we look at regions, we see that there's quite a diverse range of impacts. That's an overall trade again. Africa is the standout in terms of regions. We've seen Algeria filling some tenders, Sub-Saharan Africa with a lot of fat-filled products still going into that region, and whole milk powder at lower prices. The Middle East has also had a strong month, and we saw that in GDT earlier, where they were buying heavier. But you can see also some big falls. Mexico's quite weak. Things have slowed in South America and mixed in Northern Asia otherwise. When we look at skim milk powder, again, that's we've seen prices a bit mixed. While we're seeing some of the supply prices from Europe and the US falling, and we've seen a bit of shift in market share as a result of that. New Zealand prices were still going up.
Yeah, so a real gap emerging there in that last month of data, isn't there?
Yeah, and this is trade probably booked in December, January, so it is a fair way back, and we did have some high prices that were starting to come off. When we look at the Middle East, North Africa region and Sub-Saharan Africa, that's where the growth year on year has occurred. But when you look at the trend lines, this is more or less against prior years where things were weak at that time as well. You see the strength of that fat-filled milk powders and mixtures coming through. And skim milk powder prices are relatively flat. Sorry, whole milk powder prices relatively flat in that period. Butterfat may have turned a corner.
Wow.
After some steep declines in prices, we're starting to see some traction maybe. As we always say, next month's trade's going to be pretty interesting. Yeah. But there you could see in the developing world, that top chart there, that is starting to grow again, maybe.
Yeah. It will need to, won't it, for that trend to continue?
Yeah. Look, there's some of the high-level highlights. There's something now looking at some of these COVID impacts, and we've dug out quite a few different things. Starting with some trends in US retail versus wholesale prices. And this is a ratio of retail to wholesale. Retail prices don't move around a lot, but what we have seen in the period since March, that retail prices have lifted quite appreciably in US grocery sales. So we've pulled out here natural cheese and processed cheese, but put that into a ratio over the wholesale prices for cheddar blocks and barrels to supplying products. So that's showing a fairly big spike in that.
Yeah, it looks like some retailers are getting a bit of margin back after a few months of declines, hey?
Yeah, after a pretty lean time late last year where the margins were trimmed. That's gone back up to the highest.
But a positive to take is that those sales are going without promotion, clearly. So that's a fairly positive
Consumers
sign.
are still rocking up in droves, buying through grocery, so retailers taking advantage of that. Now we're looking at we use this term in our work, staggered reactivation, as things come back online, as we see consumers re-engaging and getting back out there. Here's some stuff that Open Table have published, some data they put out on, and they put out a few different sets of data. This is looking at percentage of restaurants open for business. Fairly encouraging in Australia and Germany, not so elsewhere. US just a bit over half as of earlier this week. And then on the right, just showing how many people are turning up. So that's a mix of, what I should point out there, that's a mix of people actually going in to dine where they're able to, picking up at curbside, which is a common practice, or doing takeaway. So there is business, business has recovered in some regions quite well, but pretty hesitant in, the US has still got a long way to go.
Yeah, sure.
With quite differences in regions. Then, Jo, you've dug out some Google data.
Yeah, this Google mobility data is really interesting. That's going back to February, and it's basically the percentage change versus the baseline in a whole lot of different countries. And you can see for those different categories, retail and recreation, grocery and pharmacy, and workplaces. That first one for Australia, a fairly steady increase in activity as things were improving for most of Australia in terms of case numbers and infections. And then we sort of compare that with a few other countries.
This one's amazing.
Yeah, Germany, those weekend spikes and stalactites and stalagmites. But again, recovery through April for some of those key mobility factors.
You can see when they've had holidays.
Absolutely. The activity is just amazing. And then we go to the US, where it's quite a different picture, isn't it? Again, fairly subdued compared to those other countries.
You can see in each of those, you can see how solid that grocery spike was back in March.
Yeah.
But also while we know grocery sales are up in all regions, up appreciably, the actual traffic isn't that much. So people are buying more.
Fewer trips and stocking up. Yeah, absolutely. So a change in behaviour that some of this seems to be picking up.
And the slow recovery, we should point out, retail and recreation is buying through recreational. So we're assuming that's a food service indicator.
Yeah, absolutely. Yeah.
Really interesting.
Yeah.
And this is how you lock down.
Yeah, we thought we'd have a look at New Zealand because famously New Zealand locked down pretty hard but has almost eradicated the virus there. So you can see that the intensity of the lockdown hitting in March, Steve, and then a pretty rapid recovery in activity. And again, interesting those grocery spikes, a little bit of change in behaviour, but that's what a recovery apparently looks like.
Yeah.
And speaking of New Zealand,
here's where milk price forecasting is at the moment.
Back to dairy, yeah.
Yeah, let's go back to dairy. That nice segue from New Zealand back into their farmgate. So each of the analysts and we've got 4 analysts that regularly comment on New Zealand, and naturally we'll brush up our estimates. We're in the process of doing that, so we're not sitting on that chart, but it's interesting how wide the range is.
Yeah.
Here we are at the start of the season. Obviously, there's some pretty different expectations about growth outcomes, some milk growth outcomes, and obviously different perspectives on how fragile the whole milk powder market might be going forward. So there's a healthy range in where each of the bank analysts and NZX are. Putting that alongside the wide range given by Fonterra at the start of their season.
And it's still within that range, that wide range of bank and NZX forecasts. Yeah.
And just contrasting yesterday's closing price on the milk futures to show where that sits. And that's, the higher end of optimism, I guess you'd say, at this time. So thanks for that. That's a good chart of the week.
Yeah.
All right, that's it from us. Thanks for watching. I hope it's been interesting. We'll see you again next week.